let's take a look here. This is the S&P 500 as I switch over from the bonds to SPX. Here is your SPX crash, essentially, that's going on. 17% off the top, the biggest six-day decline off of the top ever, and that made a 20-day low. We talked about that last week. Let me just move that thing out of the way so that you can see that a little bit better right there. Okay, so we have a 20-day low you can see right in here. That, came pretty much on time. 20 days off of this low, which was 20 days, off of this low, which was 20 days, off of this low, which was 22 days, off of this low, which was 21 days. You can see the cyclic movement in here very clearly. We looked for a short-term bottom in here, but you only got a 2-day, 3-day rally, and now you're moving down again. Look for wide chop in here is what we see. Some of the evidence is that the intermediate is bottoming along with the short term in here, but it's not likely to give you much on the upside. It's amazing. I'm telling you that there's bottoming going on when it's going down like the way it is. Of course, we had these huge swings and a very, very small change for the week. And we could get another week of that wide chop going on here. 200-point range in the S&P is easy. 3065 is probably where it stops up here. If it gets under this level here at around 2865, 2862, it's going to be in free fall. There's going to be selling coming out of the woodwork in panic. We're going to kind of look for it to chop around and make somewhat lower lows here out into the next, towards the end of March, then try to rally again. There is free fall potential during this time period. So we'll look for wide chop, wide range, momentum negative, as you can see right over here, and continuing. This is actually a sell signal that is occurring here today. So that's a warning that it's not going to be able to hold rallies on the upside. And you can see, notice the buy signal right in here, buy signal here, buy signal here, up, 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 positive momentum, and then all of a sudden sell signals coming in line right over here, negative momentum. The market is in trouble. Intermediate pattern should be giving you a little bit of a bottom in here and then trying to rally again. But in this kind of a market, you're not really sure. We're going to say that we think that this last low from last week down over here at around 28.55 is going to hold, and we're going to try to rally again in here. But we're looking for this wide range, 28.60, 30.65, fighting against this negative momentum, intermediate momentum, facing to the downside again. Some of the evidence is that we're going to try to bottom in here on intermediate patterns, but below 28.55, big trouble. Wide swings, problem market, extremely low interest rates, the Fed messing everything up over these 11 years. And this is what we have, a market where they absolutely cannot control what's going on, and they're going to try. QE4, if they're going to call it, is coming. More interest rates cuts are coming, and it's only because things are so rough in here. Yeah, you could blame the coronavirus as doing it, but was only the trigger to put us in a crisis condition that the Fed should have been prepared for, that they could do their job and deal with a crisis position, and maybe then they'd be cutting rates from 5% or 4%, but not cutting rates from 2% or 1.25% and now going to zero. Well, they have messed this up in one very, very big way, and that sadly is the condition that we're in right now. We're going to see markets move in this massive volatility. We talked about this period being a period of huge volatility coming up. It's moved up exactly at the time we said, and that's where we are right now. Look for more major volatility and more very significant damage. Hopefully we get some good news on the coronavirus. I think if we get a rally under those conditions, it is doomed.